all-time highs, but for how long? The indexes are climbing, tech is leading, and breakouts are showing up across the board. But with the July 9th tariff deadline approaching and inflation data starting to tick up, this rally could be more fragile than it looks. Hello traders, welcome to Market Edge, ahead of the trade. I'm Owen Larson with Mission Winners, and this week we're breaking down a market that's offering plenty of opportunity, but also flashing key risk signals. We'll take a look at the ETF landscape with Pat Walker, walk through a tactical playbook on trading discipline in high-stakes conditions, and wrap up with a deep dive into the max list to see where leadership is holding and where it's fading. Let's get to it.
So let's go in here and take a look. This is sorted alphabetically. ERX, this is the energy ETF. You can see the name right here, right there. And you can see on the weekly, it's still kind of in a downtrend with some distribution there and not a lot of accumulation on the daily. Notice it starts to rally up and then falls on heavy volume. At Mission Winners, this is a tactic we teach, and this is what I taught at IBD meetups also. Combine price action with volume action, and you'll have a much better understanding of strength or weakness in that stock or ETF. Not much going on there. Now here's Dow Jones Internet. Look at how this has been steadily trending on the weekly and steadily trending on the daily, walking up the 21 EMA. Yeah, we're involved with internet stocks. It's been telling us there's strength in this group, and we just get in line with it. It is a little bit extended now, so be careful buying it here. This is an important point for everybody. Buy close to the pivot and don't chase price. It just leads to potentially bigger problems. So, but internet strong, that's the key story right here. Let's move on. IBD 50 is acting a little bit better. Had a bit of a reversal bar on Friday, but you can see it's trending nicely on the daily and also on the weekly. And IBD 50 is a good proxy list of stocks, potential candidates, but it's working for us. So here we go. Now, I'm not in it, okay? But yeah, we own a lot of quality growth stocks. Not necessarily IBD 50s. They're great. But we're heavily exposed, heavily in the markets. Now, gold miners. Look at this. Starts to pick up here and then drops. A little choppy here, though. Here's a great lesson for everybody. Oh, look, it gaps up and runs up and reverses down on a pickup in volume. The next day, it falls even further on heavier volume. That's telling you something. There's some distribution there. Be careful with that. Until you start to see some strength off the 50-day and a good trend, err to the side of caution with gold miners. You can guess the next one. Same thing's true with GLD. A little sloppier there. Market was strong, and look what this did. Boom, boom. Continue onward. Cybersecurity, it's acting good, both on the weekly and the daily. You could punch up HACK, H-A-C-K, and you'll probably find some good candidates to potentially buy. There we go. And again, the trend pays. I say this constantly, and it's a fact. Trends pay more than all the decisions you'll make, folks. Ride trends. Just let them work. You can sell a little bit into strength, but again, riding trends is where bigger money is made. Also notice, we're just looking at weekly and daily charts. I haven't looked at a 5-minute chart this year. I rarely look at 10-minute charts. Let them work. IBB is just basing here on the daily, but then you look at the weekly and go, God, there's some overhead supply there. Yes, there is. It needs to see some power. One slight positive right here on the weekly, 3 weeks ago, had good volume pickup on good price action on that bar, but it's still below a lot of the moving averages. So just be a little careful with biotechnology. So let's move on. I don't want to take too much of your time. Online retail's acting good. Look at the weekly base, okay? And look at the daily. It's acting fine. You punch up IBY, you might find some opportunities there. Let me think, online retail. Yeah, Amazon.com. There's one for you. I'm not saying buy it, but just connect the dots. You look at this and say, I think I'll look for some online retail stocks. Done. Systematize. Mission Winners, we systematize. It makes it easy for us. IGV, expanded technology software, been trending in both realms. Yeah, we're involved with software. There you go. It's telling us to. Medicine is still chopping here a little bit, okay? It's a downward sloping trend line on the daily. Coincides with this downward stretch. I'll draw this to help you. I do this real time, folks. There you go. What's it need to do? On medicine, needs to start to push up here. Also note, though, combining price and volume. Ran up, but boy, it fell on heavy volume on the weekly here. That's some distribution. Needs to see some power on the way up. Price action backed by volume. Let's move on. IJH mid-cap starting to improve a little bit. You can see it on the weekly. You can see it on the daily. Like see a little bit more volume, but it is improving. Looking at some mid-cap stocks. Continue onwards. Aerospace and defense. Look at that nice trend. Nice trend on the weekly. Nice trend on the daily. I'll say it again. Trends pay more than anything else you'll do. Just ride the trend. Don't overthink it. You can sell a little bit into strength, but look at the walk up the 80 EMA. Look at the walk up to 21 EMA. That's the blue moving average. The green line's the 50-day. There we go. Now, buy it here. It's extended in price now. You're chasing price. Don't chase price. Buy close to the pivot or don't buy at all. There's strength here, but there's not a safe entry. All right. I mean, a person could buy this and it can fall all the way down to 183 and the pattern is still intact. But in the meantime, you're down 4.5 points. And you don't want to do that to yourself. There we go. Chasing price is bad. U.S. home construction, pretty sloppy on both the daily and the weekly, as you can see. Be careful with home construction. S&P 500 growth, look at the weekly chart. This is why we do this. I do this every day for myself and for the clients. It's just working. Let it work. Gives us strength. Shows us where there's money, small caps. Here we go. Russell 2000. It's a little bit better, but watch this. Oh, this is way into new high ground. Okay, S&P 500 growth. Okay. Small caps, IWM. It's lagging. It's not as strong. It's improving, but it sure hasn't been as strong as the others. So do we have a lot of small cap exposure? Not really. No, it's told us not to. Continue on. Real estate's really doing nothing. Look what this did. The market was strong. Look what this did on the weekly on heavy volume. Be careful with real estate. Isn't that good to know? Transportation's acting decent, weekly and daily. Looking at some transport stocks. Airlines, that's okay. There was some improvement here on the weekly, but it really needs to take out these tops on the daily too, okay? And again, a lot of overhead supply over here, folks, all through there. What's overhead supply? Let's put it in layman's terms. Somebody bought this here, right? Somebody bought it here. All through here, there were buyers, okay? In fact, there were. And then they got kind of hit hard here, didn't they? And then it comes back. And if it starts to lift a little bit more, people that bought it here saying, thank heaven I was getting killed in that sucker. It's getting a little close. You know what? I'm selling it. That's overhead supply. There you go. A lot of folks don't understand that. That's layman's terms and it works. Online retail, what do we have here? Banking. Banking's picking up a little bit on the weekly and the daily. A little sloppier, okay? Not a lot of, robust power in that sector. Insurance, it's a decent base. There's a downward sloping trend line, but now we can get rid of this because there's a base across. That's the downward sloping trend line. I could take that off. And you can see, I'll draw this to help you. There's a base right there. Just needs to take that out. Take out these tops. Insurance. Now you can look at the ETF, but you can also look at leading insurance stocks. You don't need to look at all of them. Just here's a great screen for you. You see that's all insurance is improving. Make a screen and just one of the constraints, stocks that are within 10% or 15% of 52-week highs. No low price stocks either, okay? Just 10 or 15% of 52-week highs, and it's over 12 or 15 bucks a share and trades more than 200,000 shares a day. That's a great shopping list there, folks. That's 30 years of work right there in that statement. It works. Here we go. KR, not that long. Wasn't that long. But it was enough. Regional banking, hanging in okay. All right. Like to see a little bit more power, but not too bad. Mid-cap's acting a little bit better. That's good to see. Oil services, do a compare and contrast. Oh, the mid-cap's kind of basing on both the weekly and the daily. Yeah, that one ain't doing so good. Oh, isn't it great to know? Right now, what does it say? Stay away from oil service stocks. It's great to know what to look for, what to look into further, and it's great to know what to stay away from. Pharmaceuticals, kind of sloppy. Be careful with that. QLD, NASDAQ 100, picking up. And it has been actually strong through here. Okay, good. Involved with NASDAQ 100? Yeah, for sure. QQQ, the other ETF, fine. Retailing, starting to improve. Look at that base. I already drew it for the VIPs. Got to take out these tops, but it needs to do it with volume. And if you notice closely, it fell on heavy volume, and it's coming back on the weekly on less volume. And there's just not a lot of power here, folks. All right? So be cautious with that. I'm going to take this a step further for everybody. This is stuff I used to teach. Remember this, folks. This is really important. Just because it's a green bar doesn't mean it's a good bar. Just because it's a red bar doesn't mean it's a bad bar. It's like, well, boy, that's a green bar with good volume, man. That's awesome. Look at what it did. It gapped up and it closed in the bottom third of its range on heavy volume. There was some selling there, not buying. Okay. Now it's lifted up a little bit, but there ain't much volume on this thing right here. Okay. So just things to be concerned with and understanding with the ETF. That same tactic holds true for stocks too. All right. Just for what it's worth. There we go. Same parameter. Clean base right here. What's it need to do for retail? Again, take out those tops with volume. Maybe look into some retailing stocks. Cloud computing's acting decent. Technology related. That's good to see. Silver's kind of sloppy. Look at this. Gap up, gap down, runs up, gaps down. Kind of sloppier. Be careful with silver. Steel's picking up a little bit. Some improvement there. Maybe looking at some steel stocks. Semiconductors. Look at that. Acting fine. Technology related. There you go. Look into it further. By the way, it was strong back here too. Look, yeah, were we looking into it? Oh yeah. You bet. Technology. Same thing's true with SOXL. Spider steadily grinding on up here, trending up. Look at the trend. This is what's beautiful. Trends, again, pay more than anything else. Look at the trend up to 21 EMA. That's the blue moving average. Right here, right here, right here. It's just walking up to 21 EMA. That's powerful. It's powerful lesson for all of us. Continue onwards. SSO, same situation. Solar's kind of choppy here. Look at the overhead supply on the weekly. Be a little cautious with that, okay? With solar stocks, small caps picking up just like IWM. That's good to see. Oil, stay away. Look at that. By the way, you want to see something interesting here? It's going up, but gosh, it dropped down here on a pickup in volume, faded here on a pickup in volume. Runs up just a little bit, and then they slammed it. Isn't that interesting? Just looking at price and volume. Tremendous power for us. Let's go on. Here we go. Aerospace and defense. Look at that nice trend on the weekly and the daily. Aerospace and defense. Do you know any big aerospace and defense stocks? Yeah, I think Boeing's one of them. There you go. BA. I'm not saying buy it now, but that's just connecting the dots. Let's move on. X biotechnology. A lot of overhead on the weekly, choppier on the daily. Be careful with biotech. Done. Home builders picking up a little bit, but kind of sloppy here, right? And a lot of overhead on the weekly. Be careful with home builders. Materials. How do you build things? Well, you need materials. It's picking up a little bit, but still a little sloppy. XLC, communications, another technology-related ETF. Looks good. Don't chase it up here, but it's been telling us for a while. Hey, you might want to look into telecommunication stocks, communication stocks. You can punch up XLC and look up what their top 10 holdings are. There could be opportunity. There probably was back here. Take a look. That's why we do this in Mission Winners. Energy. Look at that. Let's flip the coin. How's this look? Oh, there's some selling right through here, Pat. Yeah, stay away from energy stocks for right now. Isn't that good to know? It's good to know what to look farther into to maybe buy and stuff to stay away from. Financials are acting okay. That's good to see. Industrials are acting okay. Look into that group too. Technology, that's acting great. A little bit of a pullback today on Friday, but the trend is up. Look at that nice trend. Yeah, are we involved in technology? Yeah. Why? Because it was telling us to. Price and volume was telling us, hey, it's something you might want to look at. We've been involved with it for a while. There you go. Continue. How about this one? Consumer staples. Do you think we're involved with consumer staples? Nope. There's no reason to be. Utilities, just kind of going sideways. Not really too much to do there. Pretty sloppy and choppy also on the weekly chart. And then we've got XLV. Healthcare's lagging. Not much going on there. Stay away. Consumer discretionary picking up here a little bit. Look at the nice base on the daily. Look at the nice base on the weekly. And look what it did on the weekly. Pushing through with a volume pickup. You might look into some consumer discretionary stocks. XLY. You can just Google top 10 holdings, XLY, and you'll find them. Look into that. There you go. XME, still working. Metals and mining's been okay. Oil and gas, kind of sloppy here, isn't it? Stay away from oil and gas. Retailing, just going sideways and not showing a lot of power. Be a little cautious. Software's hanging in okay. Okay. Looks a little bit better on the weekly than the daily, but software stocks, big dig a little bit. We're back to the top.
So we've got strength in key groups, especially tech and discretionary. But the risk side of the tape is getting louder. We've got extended price levels, a looming tariff deadline, and inflation creeping back into the headlines. That's when a trader's discipline really gets tested. Too many traders get caught chasing momentum just as the market is setting a trap. So in this week's tactical playbook, we're looking at how to stay grounded, avoid getting derailed, and protect your edge, even when everything looks easy. Quick heads up before we dive into that. We just launched a special video series called Derailed, 14 Reasons Traders Quit Before They Win. Each episode unpacks 2 common pitfalls, things like chasing extended stocks, ignoring your stops, or letting frustration throw you off your process. If you're serious about staying sharp in this kind of tape, go check it out after the show. When the market's moving well, it's easy to get loose. You add a little more size, you chase a little higher, maybe you let your stop widen. But that's usually when the market reminds you strength doesn't mean safety. Here's how to stay grounded when price action feels good, but risk is quietly building. First, be honest about extension. Right now, the S&P is pushing right into the top of a long-term price channel. The NASDAQ is already through it. When you're several percent above the 8 or 21 EMA, you're playing with stretched risk-reward. That's where traders get shaken out, not where pros add size. Next, focus on buying structure, not strength. The biggest moves don't come from chasing green candles. They come from buying clean setups that base, tighten up, and break with volume. That's what institutions look for. That's where the real edge is. And finally, be smart with your position sizing in front of headlines. The July 9th tariff deadline is a live risk. We've already seen markets react sharply to just a whiff of trade news. So stay flexible. Keep cash available. Know where your stop is and be okay using it. Look, when the market's strong, you should be participating. But participating doesn't mean overexposing yourself right when risk is rising. Let price lead, let volume confirm, and let discipline do the heavy lifting. All right, so we've covered the big picture and how to handle it. But where's the leadership showing up? That's where the max list comes in. These are the institutional darlings, and if there's strength in this market, we'll see it show up here first. Here's Pat Walker with the breakdown.
Let me be very pragmatic here. By letting price and volume tell us what to do, it keeps us in line with what the market's doing, but it also helps lessen stress with us. We don't have to figure it out. It's telling us what to do. But again, both variables, price action combined with volume action. Now here's Apple. Just going sideways on the weekly, just going sideways on the daily. It's not showing a lot of power. I just showed you what the NASDAQ's doing here. There's QLD trending on up, right? NASDAQ 100. Apple's just not participating at this point in time. So what does that say? At this moment, just leave it alone. There's better fish to fry. Nothing to do with it. Continue onwards. AMZU, this is the Direxion daily Amazon stock, okay? And it's trending, basing here, and it broke out on a pickup in volume. Well, that looks like a pretty decent base right there. And you can see on the weekly, had a cup with a low-level handle right here. Look at the volume pickup on the weekly. So let's take it a step further. You know the next one, Amazon. Same pattern, nice weekly base break here. And here's the daily. I'll draw this to help you. And it lifted up, it opened up, it gapped up, and it ran up, and then it fell, and then it took off. But here's the power play. This is what we look for. This is a great tactic. This is what I've used for years. And I taught this at IBD meetups also. Here's the daily chart, or the 10-minute, excuse me, I apologize, the 10-minute chart. And it just kind of, it ran up. This was Friday, yesterday. Ran up, meandered, fell, starts to pick up, just basing here. Market, it's getting later in the day, so we'll have to watch it. Institutions can move in later in the day too, let me tell you. Price combined with volume action. Well, it's starting to pick up here, and there's a slight volume pickup. It's near the highs of the day again. We'll have to watch this. Oh, man, I'm glad we didn't do anything. But you know why? It didn't have strong price backed by a huge volume surge. So we waited. Just waited. And then they voted. Look at the volume on that bar, folks. This is a 10-minute chart. They bought the tar out of it, okay? And yeah, we did too. There you go. No, I don't say bought the chart, but yeah, we were buying. It was telling us to, combining price and volume. That also coincided with taking out the highs over here, and also coincides with taking out daily highs. And you look at the weekly, close near the highs on a pickup in volume. It's a good start. Is it going to continue? Nobody knows the future, but at Mission Winners, we combine price backed by volume action. Now, if this was lifting up, but there was no volume, wouldn't have bought it. Bought it a couple times, but it was. So there you go. Let's move on. Push this back to the daily chart again. And again, there's Amazon. Look at that. Look at that simple base there, folks. Is that a thing of beauty? I talked about that, I think, every day on videos at Mission Winners. And this is a good base here. We'll have to watch it. And you can say, what do you mean? That's a good base, folks. That's what we're looking at. Just simple base. That's what we're after. Let's move on here. Alibaba, how's that look to you? It's below all the moving averages. They're falling. Ain't doing nothing. Leave it alone. BIDU, below the moving averages, just chopping around. Nothing to do with it. Move on. I'm not doing that to be cute and funny. I'm just saying, if it ain't there, it ain't there. Move on. Goldman Sachs, nice base right here on the weekly. And it coincides with this weekly base or the daily base on the daily chart. And it's just slowly trending up. This is the 8-period exponential. Closed a little bit below the 8 on this bar. And other than that, it's just walking up the ADMA. Trends pay more than all the decisions you'll make. Yeah, it's owned. We own it. We bought it. It's working. You don't have to do anything with it. Just let it work. Where's it going to stop? I don't know. I don't know. Will we sell a little in the string? Yeah. We'll watch and see what it does. Use these. By the way, the reason we do these videos, it's not to, brag and all that crud. That's nauseating. I'm passionate about educating and showing people what to look for fundamentally and technically in the charts to make better investing decisions, make more money, and be safer too. So there's Google picking up here a little bit. Now you can see right here, this is a weekly chart. It ran up and then it fell, and it fell hard. Fell hard here on the daily too, okay? What do we need to see? We got a good volume pickup. Prefer this to take out the weekly highs here, or that coincides with this bar here. Take that out, but what's it gonna need? Volume. What's the negative? It's a choppier chart pattern at this point in time. It's not clean and simple, okay? It's whipping around here. Be cautious with that. Just pointing that out. So you can say, well, if this triggers, Pat, let's lay it out here, buddy. If this triggers, should I buy it? Yes, you could buy it. But because it's a little looser of a pattern, how do you lessen risk? You buy less. You buy less shares. Good investing is not one size fits all. We go bigger on clean and simple base breakouts. We go smaller on patterns that are less reliable. There you go, and it works. MasterCard, that's kind of sloppy. I'd be staying away from that. Meta, note the simple base right here on the weekly. That coincides with right there. That's the daily. It's the same base. Look at the lift there. Look at the volume pickup on that bar. And look at the trend. Trends up the 8, finds support on the 21 EMA, the blue moving, and it's just trending nicely. It's working. MAXLIST stock. Yeah, and we own it through here. Bought a couple times and we're in good shape. We'll let it work. Now, somebody could say, oh, man, that's awesome. I'm going to buy it here. No, I encourage you, please. It's extended in price. There's no safe entry. Let's suppose you do buy it here. I'm big on risk control at Mission Winners. I'm telling you. Just so you know, my only source of income for a family of 6, I was the sole supporter, was investing profits. Nothing else. Oh, you had an inheritance. No, I didn't have any inheritance or anything like that. It's just living off the money. So this is where it's at. Trending up the 8. We'll just let it work and see what it does. I like the volume, price and volume action on Friday too. So good job. Let's move on. FBL, this is 1.5 times Meta. It's a way to be involved in Meta. By the way, you can say, is it really? I'd like you to look closely at the weekly chart on Meta. Okay? And then here is the weekly chart. It's pretty dang similar pattern, folks. Kind of a V-shaped cup with a little handle here. V-shaped cup. V-shaped cup. That's easy for me to say. V-shaped cup. It's had a handle here too. Same dang pattern, and it lifted up on volume. And it's working here. Now, Similar pattern. Why am I showing this to you? This is a way that a person can get involved with Meta, and instead of spending $700, you can be involved with it buying it for in the 40s. Now, here's another example though. It's a little bit extended in price right now. I wouldn't suggest buying Meta here. We may add to it, okay? But an initial buy here, buy close to the, folks, this is a very important lesson. Said this at IBD meetings for years. Buy close to the pivot or don't buy at all. Don't chase price. It'll lead to bigger losses. Protect your assets, financial and mental. Continue onwards. Microsoft just been steadily trending. Look at that. Isn't that nice? That's the ADMA, folks. It's just walking up the 8, and it has for a while. You just get in line with it. Continue onwards. Netflix. Look at that weekly cup and a handle right here. That's beautiful. Here it is. There's the base. Oh, just a base, excuse me. Base right there. Buys down here under 1,000. More buys right up here at around 1,070. So we own it here for 1,050, we'll say. Okay. And here it is at 1,330. Dang near 300 points. It's just trending. It's just trending. That's it. Let it work. If you look closely, folks, and again, this isn't bragging. I want to educate on what to look for. If you look closely, this stock has not closed below the 21 EMA for the whole move. Trends pay. That's just get in line with it. Continue onwards. NVIDIA, another long base breakup right here. Look at the volume that came into it, spiking up in here. And it's working. What are we doing? We also own it down lower. I just want to show this. And again, lower level bases. Right there, look at the volume pickup. Going sideways right here, takes out these tops. Look at the volume pickup versus the previous bar. On this bar, the volume right there, 132 million. On this bar, 225 million. Almost 100 million more shares on a daily chart bought right there. And then it follows through in the next bar with 330. They're buying it. They were voting. Yeah, we were voting too, and we're in it. And what are we doing? We're just letting it work. Where's it going to go? I don't know. We sold some into strength, but it's working. Just let the stock do work for you instead of your fingers on the keyboard all the time. It will help you. You can say, well, God, I really want to sell some. I really want to sell some. I can understand that. How can a person sell some but still be involved with the stock? Don't sell all of it. Sell a portion. You guaranteed yourself a profit, but it also does something else very important. It lessens stress. It lessens psychological, emotional stress. You know you're going to make money, which leads to clearer thinking. Clearer thinking, better decision making. There you go. That's combining all the variables together. Let's move on, shall we? NVDL, same situation. Tesla ran up right here. And then they reversed it down. We bought this right through here. Runs up, sold some in the strength, and then it starts to fall. We ain't going to take a loss. We sold it. That's it. Now, it needs to, and I need to refresh this weekly chart. I'll do that later. But let me see if I can do it now. There we go. My apologies. There's the weekly updated. Yeah, it ran up, fell. There's nothing to do with it now. We just have to leave it alone. Wait, maybe it'll base here and take off. What will we look for, folks? A bounce off the 21 EMA, that's the blue moving average, taking out these highs right here with really heavy volume. There you go. That's the trigger, and a good market, always. Same thing's true with TSLA, another way to get into it. If you don't have, funds to buy Tesla at 300 some odd bucks, you can be involved with it with TSLA. There you go. Visa, there's nothing there. Leave it alone. Done. And back to the top. Anyway, that is a video overview of the MAXLIST stocks. Opportunities are there.
That wraps up today's episode. Huge thanks to Pat Walker for another deep dive and to all of you for tuning in. If you found this helpful, make sure to subscribe to Mission Winners on YouTube, check out missionwinners.com, and stay sharp out there. Master your strategy, trust the process, and maintain your edge.
I am here in the middle of nowhere. There is no there.